We start with the job description. We're told here that you're a financial manager employed by BES. You're reporting directly to the finance director of the BES group. So we're talking about a group. So we're talking about consolidated financial statements. We have a parent and its subsidiaries here. We know later on in the pre-scene that BES has grown through acquisition. It's acquired companies along the way, so they need to be consolidated in the financial statements. You're responsible for overseeing the management accounting function, preparation of the group budget, and supervision of regional finance managers. So we're talking about the core financial accounting skills and management accounting skills when it comes to the group budget and the management accounting function. But also we're adding leadership and people skills. At this level, they're becoming more important than they were at the operational level because you're supervising others. You have that human interaction. It's not just about technical skills as it was at operational level. You're then told that the finance director needs to be assisted on special projects. This is very open-ended. It could be anything at all. You could be talking about investment decisions and projects like that, potential acquisitions, etc. Thinking about the role of the financial manager, and CIMA gives us some guidance here. What you're expected to do and the types of activities that come up in this case would be the following. So starting with monitoring the implementation of strategy, the decisions taken on the strategy of the company would be taken at director level and above. The board of directors would be planning the strategy of the company, but it's the management level that actually implements the strategy. And then when you talk about the next level down, which is more the operational level, they would actually be executing the day-to-day tasks linked to the strategic decisions. So you're monitoring the execution of tasks. You have people under you. We were told that before. You're supervising other finance managers. Then secondly, there's a medium-term focus here. With the operational case study, it's more a short-term focus, as I said, daily execution of tasks. At the strategic level, it's a long-term focus. It's a really a strategic focus you have at that level, where you're talking about decisions being taken on the basis of outcomes going 2, 3, 5 years into the future. You've got a medium-term focus, maybe over the next year or two. That's where your focus is going to be. And what that means is you're focused on investments in certain product areas and setting prices for those products. Risk is very important at this level. You think of the TARA model for dealing with risk, which is to transfer, accept, avoid or reduce the risk. We'll take a look at that. In fact, the BES group has its own risk register, which is a good thing. It means they're keeping an eye on their risks and trying to manage them. We're talking about long-term financing decisions. We spoke about investments in certain products and things like that coming up as you have a mid-term focus, and then securing the financing for those investments is important at this level. So whether you secure it through debt or whether you secure it through equity or something else. You'll have more advanced financial reporting considerations at this level too, and you'll be expected to influence top management. So you'll be interacting with directors more. You'll be interacting perhaps with the CEO of the company or other members of the board of directors. So influence is an important skill to demonstrate here, which would tie into the people skills that you're meant to demonstrate more frequently at this level. You need to consider, of course, the environment in which you work and the stakeholders linked to the business. The environment, we're talking here about the general economic and country environment. So you'd use models like the PESTEL analysis and the industry itself. So you'd be thinking there about something like Porter's 5 forces, where you're looking at the power of the different players in the particular industry. Stakeholder analysis, then you could think of Mendelow's matrix there, whether participants and people linked to the company have high power or low power, and whether they have high interest or low interest. We'll take a look at some of those as we go through this case. Now we take a look at the BES Group background, what the history is, and their business model. So we'll be looking at the pricing for their products, the different products that they offer, as well as their distribution tactics and their dealings with suppliers. So the BES Group is a chain of value retail stores that is run out of Country E, which is its home country. The group, we're told, is listed on the stock exchange, and its financial statements are prepared in accordance with international financial reporting standards. And this group reports in e-dollars. So thinking about, first of all, the fact that this is a stock exchange listed company, there are certain implications there. There are compliance issues, shareholder pressures, of course. The shareholders will be expecting a certain return on their investment, whether that comes in the form of a regular dividend payout each year, or whether the stock price is increasing and they're getting the return in that way. There are certain pressures that come with being a stock exchange listed company. There's public scrutiny. The financial press is going to be analysing the financial statements, as well as analysts at investment banks and the like. So certainly there are some onerous regulations and pressures that come with being a stock exchange listed company. On the other hand, there are numerous pros, of course, the principal one being access to financing, to equity finance. This allows the company to invest for the future, and this is the chief advantage of being a stock exchange listed company. Of course, as well, there are reputational benefits because you're being scrutinized in a way that a private company is not. It leads to reputational advantages because you kind of pass a stringent test set by the marketplace. BES was established 22 years ago in 1995, and the company has grown through acquisition. So this is a more aggressive form of growth. They've expanded rapidly in this way by acquiring existing value stores and turning them into BES stores, and then they lease their retail sites. And we're told later on that 90% of their sites are in town centres, and that's important because you get a lot of people passing through town centres, and because this is a value retail store and the prices are going to be low, the margins are going to be lower, it's all about volume. You've got to get people into the stores in large numbers buying to make this a viable business. Then we're told that there was an initial public offering in 2012, so it's been on the stock exchange for the last 5 years. By the end of 2016, the BES Group had 240 retail stores, and it has launched 5 trial stores in the neighbouring Country X. So this begs the question as to whether the home market is in fact saturated, whether there's not much more growth there. In fact, there are some figures that we will analyse later on in the pre-scene that lead me to believe that Country E is in fact a little bit saturated and it's necessary to expand internationally. Thinking about the pricing then, which we see in the next section, and very simple. Everything goes for the price of $1. This is similar to stores like Poundland in the United Kingdom, which again prices on this single price point of £1, and it's very simple. Customers know exactly what they're getting here, and it keeps things simple as well for staff, which we're told in a little bit. So it's all about offering value for money, or the perception of value for money. We're told then that the average worker in Country E is earning approximately $7.50 per hour. So it's difficult to know without knowing the exchange rate between the e-dollar and other established currencies where this places Country E in relation to other real-life countries. But if we were to take e-dollars on a one-for-one basis